This setup is so precise that 3 sell trades already brought a pretty solid profit. Let me walk you through this setup in detail. While I'm recovering from surgery, whenever I have free time, I record these videos for you guys. Some entries made profit, and some entries failed and hit the red SL. But that's okay. In this video, I believe you'll gain new knowledge and new tools to improve your trading. Take out your notebook and write everything down carefully, because the lessons below can help you reach the results you want in the future, as long as you follow them correctly and with discipline. If we look closely, we can see this is a bearish continuation engulfing setup. Let me zoom in so you can see it clearly. All the conditions are there. The red candle in the middle engulfs the previous green candle. The first red candle has no upper wick rejection, and the second red candle has an upper wick rejection. The upper wick of that second red candle is clearly longer than the lower wick. However, the problem is that the candle is still closing above the EMA 200. Even though there is already a touch signal from the indicator here, we must respect our trading rules and the setup. So we wait instead of entering a sell trade here. Just wait for one more candle. 3 minutes is worth the wait. So what creates the opportunity here? After waiting 3 minutes, a new red bearish candle appears, forming a set of 3 bearish candles with increasing body size. This candle has a bigger body than the previous one, and this one is bigger than the one before it. The key point of this third candle is that it's big, strong, and it closes below the EMA 200. That means our patience paid off. Option 1, we accept missing an early opportunity to get a better entry. Option 2, we pay tuition with our own money. I will enter a sell trade here, and I will place my SL right above the bearish continuation engulfing pattern. The SL looks a bit wide, but with this strong selling momentum, I'm confident we can reach at least 2R. Let's wait and see the result. If there wasn't a touch signal from the super scalping indicator here, if there wasn't a bearish continuation engulfing pattern here, and if there wasn't a close below the EMA 200 like this, I probably wouldn't have hit this green TP, right? Respect the indicator. Respect the setup I teach you. If you do that, the market will respect your wallet. I'm sure about that. I won't explain this entry too much because it was already explained very clearly before. If you don't understand why we enter a sell trade here, why the TP and SL are placed like this, and how to hack the game in trading to get 3.5R, please go back and watch the Day 4 trading journey video. The setup there is very similar to this one. So now we have one sell trade here and one sell limit order waiting here. Let's wait and see the outcome. Some of you may wonder why I didn't enter a sell trade at this position. So let's rewind the chart and zoom in on this candle. Yes, this candle pattern does meet the conditions of a bearish continuation engulfing setup. But notice this, if I enter a sell trade here, the reward ratio would only be around 1-to-1. We must follow the TP zone from the previous 2 sell trades to keep the targets consistent. That makes the reward ratio clearly not optimal, and if it's not optimal, we simply don't take the trade. Well. Once again, the market respects the indicator, and the market also respects the bearish continuation engulfing setup. There is also something quite interesting and surprising here, and because of this factor, I can confidently say that these 3 sell trades will reach TP. That factor is the upper wick rejection of these 2 candles here. Both candles swept the upper wick into the EMA 200, but they still closed below the EMA 200. This clearly shows more respect for the EMA 200. That's a lot of respect from the market. So I will also respect the market. I respect the sellers, and I respect the sell trades I currently have. Let's see if the money will respect me back. I'd also like to announce that I now have a channel reaching international traders, and I'm giving them a 90% rebate. The remaining part will be a bonus for anyone who is currently receiving a rebate from another IB and decides to switch over to me. But remember, you need to prove that you have been receiving daily rebates from another IB before switching to me. If you do that, you can receive up to $20 as a bonus. At the same time, I will also give you the indicator shown at the beginning of this video so you can test and experience it yourself. I guarantee the highest XNES rebate mechanism, and I won't take even $1 from you. feel free to contact me. Clearly, the money has respected me already. Thank you very much to the market for respecting this indicator of mine. Now, this might be a new piece of knowledge in the $20,000 trading journey. It's the evening star and morning star pattern, but this pattern must have a doji candle in the middle. Let me zoom in so you can see it clearly. Here we have the morning star pattern. In this pattern, we have a red candle here. Its body is smaller than the green candle on this side. In the middle, we have a doji candle with a very small body. This type of candle has the open and close prices very close to each other, with both upper and lower wick rejection. The special condition is that the opening price of the red candle must be higher than the upper wick of the doji candle, and the closing price of the green candle must also be higher than the upper wick of the doji. Only then does this doji morning star pattern become a valid setup. But here's the important part. The red candle and the green candle must have big, strong bodies with clear momentum. If the candles are weak and tiny, don't count them as a setup, because that will likely lead to losses. And of course, we also need a buy signal to support the setup. This setup doesn't require the EMA 200, but it becomes even stronger if the pattern forms above the EMA line. That's it. The more confluences we have, the stronger the setup becomes. For a doji morning star or doji evening star setup like this, you can aim for a 1:3 risk-to-reward ratio. If you are more conservative, you can simply target the standard 1:2 ratio and go for 2R. See that? The price is still respecting the EMA 200, so let's wait for it to come back to break even and close the trade there. Even though the EMA was respected, the buyers were still strong, and because of that strength, the trade eventually reached a green TP. I traded until noon on the 24th, then I had to stop and rest. I only had enough energy to continue recording again on the evening of the 25th. When the signal is purple-pink, we sell. When the signal is sky-blue, we buy. The TP and SL rules are exactly the same, just in the opposite direction. So what candle pattern do we have here? And we also have a buy signal here. Is this enough condition to enter a buy trade? Let me explain it one more time so you can clearly remember this new knowledge. The middle candle is a doji, where the open and close prices are very close together, with both upper and lower wick rejection. The red candle and the green candle must be big and strong, and the green candle should be very powerful, even closing above of the previous two red candles. That clearly confirms that the buyers are very strong. So once again, I will aim for a 3R target on this trade. Did this video make you say wow? Leave your comments below and tell me what you learned today, whether it's new or something you already knew, and whether anyone has applied it and hit more green TPs. I wish you many green TPs. I'm 10-Hour Trader, helping you become a better trader.